Hello everyone and welcome back to the next episode in this course. Now, in this video we're going to be discussing pips and lot size, okay, and how to actually work out what your pip value actually represents in a actual financial amount, okay, whether that be dollars or pounds. We're going to work out what our pips actually represent, okay, dependent on our lot size that we actually trade in the markets. So to start this all off, okay, we need to ask ourselves the question, what is a pip? Now, a pip is what we use as the unit of measurement to describe the changes in value between two currencies. So it's either identified as traditionally either the fourth decimal place on certain pairs such as pound dollar, and the second decimal place on yen pairs such as dollar yen, for example. Here on the screen, okay, you can see that we have pound dollar at a value of 1.2100, and we have dollar yen at a value of 135.80. Now here you can see on the top number, the fourth decimal place will represent 1 pip. Okay, 1 pip of movement. So say for example the price moved to 1.2101, that will mean that the price has moved 1 pip. Okay, now for dollar yen it's slightly different, and we're actually just working on a 2 decimal place system. So for example, if the price moved from 135.80 to 135.81, it means that we have moved up 1 pip. Now, sometimes you may notice, okay, for example, on brokers and also on TradingView, that they actually display prices with an extra decimal place on both of the values. Now, for example, on the euro-dollar pairs, they'll actually have 5 decimal places. And on pairs such as euro-yen, so yen pairs, they actually have 3 decimal places instead of 2. Now, this is just because basically what they've done is they've added in an additional value, okay, where we now have pips and also pipettes, or you could also refer to it as a tick. Okay, now these new additional places are to show 1/10 of a pip. Okay, they're referred to as pipettes or ticks, and it's just good to bear this in mind when working out your pip value, as you need to be focused obviously on the fourth and the second decimal place dependent on the pair that you're actually looking at, because as you can see on the right hand side of our screen, we have values with 5 decimal places. Okay, you can see that, you know, it's 1.31, okay, and then there's 3 other numbers. Now that again is representing the pipette, okay, as the 5th decimal place. And again, we're just focusing on that 4th decimal place on certain pairs that aren't yen pairs, okay, and on yen pairs, again, we're just focusing on that 2nd decimal place. Now, to actually determine the value of a pip, we need to do some basic sums depending on what currency you want the pip value in, and also which pair you're actually using will change the outcome. So that's what we need to work out first. So the first thing we need to do is work out what our lot size is going to be, and then we can determine the pip value from this. So let's have a little look at lot sizes now. Okay, so as a basic starting point, okay, we need to discuss the different units that are associated with lot size, okay, and these have different actual currency values, okay, in terms of how much of a base currency that you're actually able to trade with. So as a basic rule of thumb, okay, one standard lot is equivalent to 100,000 units of currency. Okay, so 100,000 units of currency is one standard lot. One standard lot, okay, is written as 1.0. Okay, and that means that you have control of technically 100,000 units of currency. Now, the next option, okay, that you can have is one mini lot. Now, one mini lot, okay, is represented to 10,000 units of currency, okay, and it's represented as 0.1. Now, below that, we have one micro lot, which is 1,000 units of currency, okay, and that's represented as 0.01 lot size. And then now you can even get a nano lot, okay, which is 0.001, okay, which is represented of 100 units of currency. Now, if we were to trade, for example, a mini lot, so our lot size is 0.1, this means that we are working with 10,000 units of currency. Now, to work out what this lot size of 0.1 actually represents in, for example, a US dollar amount, we need to ask ourselves a couple more questions. So to work out what 0.1 lots is in dollars, first of all, okay, we need to look at what 0.1 actually represents. Okay, so we know that 0.1 represents 10,000 units of currency. Okay, and then we need to do some sums just to work out what this is going to actually represent for us in an actual dollar amount for pip to pip. So let's have a little look at that now, okay, and we'll just discuss the ways in which you can actually work out what your pip value is in terms of which currency you actually want to trade in.
The best time to take action is now. What are you waiting for? Tired of struggling with market direction? Want buy and sell indications at a click of a button? Who wouldn't? Check out TradeDork's buy and sell indicator today at TradeDork.com.
Okay, so to be able to work out what our 1 pip value actually is based on a 0.1 lot size, okay, the first thing we need to do is identify what 0.1 actually is as a unit of currency. So we know that 1 mini lot, okay, which is 0.1 lot size, is equivalent to 10,000 units of currency. Now, if you want it in dollars, then when dollar is the first currency in a pair, so for example, dollar CAD, the first thing you want to do, okay, is find the actual value of the dollar CAD, okay, and what it actually represents. So in this example, okay, you can see that dollar CAD has an example value of 1.3620. Okay, so we know that 1.3620, okay, is a 4 decimal place value. Okay, so we know that 1 pip is the 4th decimal place of that number. So now that we actually know this, okay, we need to take this information and we need to put it into a simple formula, okay, where what we're going to be doing is we're going to be taking the 4th decimal place value, okay, so 0.0001, because we know that that represents 1 pip. And what we're going to be doing is we're going to divide that by the current value of the dollar CAD. So say, for example, the current value of dollar CAD is 1.3620. We're going to be taking 0.0001 and dividing that by 1.3620. Now, if you do this, okay, we then want to times it by the actual lot size we're trading, okay, and we want to be looking at the actual units of currency that we're representing. So because, for example, we're putting on this 0.1 lot trade, okay, we know that that is 10,000 units. So then we're going to take that sum and we're going to times it by 10,000. Now, if you do this, okay, in the calculator, you'll receive a value of 0.73, okay, if you round it to 2 decimal places. And that means that for every pip, we are moving at a rate of 73 cents. Okay, so in this example, okay, this is based on the fact that dollar is the first of the pair of dollar CAD. Now it's slightly different, okay, if dollar is the second pair. So we're just going to have a little look at an example of that now, okay, on a pair such as pound dollar, and just look at the difference in the formula in terms of how to work out a pip value, okay, and everything's slightly the other way around. So let's have a little quick look at that now. Okay, so in a slightly different variation, okay, if dollar is the second currency value, first of all, okay, we want to work out which decimal place represents 1 pip. So again, we know that, for example, pound dollar could have a value of 1.2100. So we know that 1.2100, 1 pip is the 4th decimal place. Now, there's a slight variation in the formula here, okay? So in this situation, okay, we're still going to take that 4 decimal place value and we're going to divide it by the current rate of 1.21000. We're then going to times it by our units of currency, which we know is 10,000 because we're trading a 0.1 lot size. Okay, and then finally, we're going to just retimes that by the initial currency pair value, okay, of 1.21000. And if you put that into a calculator, you should receive a value of $1. Okay, now this now means that for every 0.1 lot size, okay, on a pair such as pound dollar, we are moving at a rate of $1 per pip. Now that's quite a simple translation, okay, from 0.1 lot size representing $1 per pip. And there's actually a faster way to work this out, okay, which I'm just going to show you in a moment, how you can actually just look at the currency pair, identify which currency you actually need to focus on, and then related to whatever your lot size is, okay, there's an easier way to actually just do it in the moment to understand what your actual lot size is going to be, okay, if you haven't got time to actually put this equation into a calculator. So let's have a little look at that now, and we're just going to discuss, you know, the simpler way of actually being able to understand these lot sizes, okay, and how it actually relates to our pip values. So let's have a look at that now. Okay, so a faster way to actually work out exactly what your lot size represents in a pip value, okay, is to take a currency pair such as pound dollar, but this time just focus on the right hand currency. Okay, so in this example, pound dollar represents the pound versus the dollar. Okay, so we're going to just focus on the dollar side of this currency pair. Now, if you take your lot size, okay, and you just simply times it by 10, this will give you your currency value amount, okay, based on whichever pair is on the right hand side. So in this example, pound dollar, okay, dollars on the right hand side, so now we're working in dollars. We take a 0.1 lot size, we times it by 10. That will give us a $1 pip value. Okay, now remember everything's in dollars because it's pound dollar. So again, we take a 1.0 lot size and we times it by 10. Okay, that gives us a value of 10, which in this situation would represent $10 per pip. And okay, and if we then, home that down and we go with 0.01 lot size, we times that by 10, that gives us a $0.1 pip value, or 10 cents per pip. So for example, if your account's all in dollars, okay, and you're trading pound dollar, you know that when you put a 0.1 lot size on, you know that straight away you're going to be running at a rate of $1 per pip, okay, because you know that my account's in dollars, so I want my pip value in dollars. I'm trading pound dollar, which is dollar is the second pair. So all you've got to do is just times your lot size by 10, and that will give you the value. Now, things will get confusing when your account doesn't match the right-hand side of the currency pair. So for example, if you have your account in dollars, and suddenly the currency pair is dollar yen, okay, suddenly the right-hand pair is yen instead of dollars. So now everything that you times by 10 is going to be giving you the yen value. So now, for example, okay, if I put a 0.1 lot size on, but I'm dealing with dollar yen, I'm still going to times it by 10. So 0.1 goes to 1, okay, so now suddenly my 0.1 lot size represents 1 yen. Now, that might not be very good for you because 1 yen in dollars, okay, might not have that ratio that you actually want, and you'll actually end up trading a much smaller size than you actually mean to do. So you need to make sure that you're actually aware of what the currency pair is you're trading, okay, and how it actually relates to your lot size, because like I said, it's not always like this simple, okay, when you have a dollar account and the pair's pound dollar. Sometimes that you'll need to work out those exchange rates, and it's quite simple to do that because, for example, if you have say 0.1 lot size, we times that by 10, it gives us 1 yen. All you'll do, okay, is just convert what 1 yen is in dollars, okay, and that will then give you some kind of scalable way of actually working out what the correct lot size is for you to actually risk, the actual amount you want to risk based actually in dollars. So obviously you can do it how we did it in part 1, okay, where we actually put it into that equation, and that will give you one way of working out how to do it. But this is just a quicker way, if you already are aware that, say for example, your account's in dollars and you're trading a pair with dollar in the second half, that a much quicker way to do things, okay, is just to times that lot size by 10, and that will straight away give you your dollar value. Okay, and that could be anything, it doesn't have to be 0.1, it could be 0.5, it could be 0.7, okay, you'll do the same thing. So if I was trading a dollar account, okay, and I had a lot size of 0.7, okay, I know 0.7 times by 10 is 7, so I know that I'll be moving at $7 per pip up and down. Okay, and that's how simple you have to keep it. So you can obviously Google these things, okay, and put them into Excel and equations to give you the correct conversions for you, okay, but this is just a run through of how it actually works, okay, what your lot size actually is and what your pips actually are, okay, and it's just something to be aware of and not get confused on, because otherwise you'll end up going to place trades and you'll end up with the wrong lot sizes and you'll end up getting confused, maybe over risking or not risking enough. So it's just really, really important to have these concepts in your head and make sure that you've got, you know, a comfortable and secure way of actually working this out on a day-to-day basis when taking trades. So I hope you guys understood everything that we've gone through in this video. Feel free to go through this video again until you actually understand the concept of lot sizes and pips. And I'll see you all in the next video where we're going to be talking about channels, so you don't want to miss it.
Be a dork.